Anne-Marie Baiynd, author and financial analyst, trader, author of the book, The Trading Book Course, A Practical Guide to Profiting with Technical Analysis. Anne-Marie, I have to ask you, is school out for summer yet?
It is finally between me and my sister. We had 3 college graduations, 3 high school graduations, and
Wow.
1 wedding.
That
It's
was so rude of
been
that person to get married at that time. Wow, busy week for you. But let's turn to the markets here, Anne Marie. If correct me if I'm wrong, but you've kind of been in like the trading range mode here. Not convinced that we were busting out the new all-time highs, or really not a significant correction on the horizon. That's kind of the scenario you got last week. You got a little bit of that. Moving into the quad witch expiration week, what is on your radar?
Well, I am thinking about how the markets are behaving before the FOMC meeting. And I told the students that I work with that whenever you come into an FOMC range, like the week before, maybe a week and a half before, if you see any kind of big rocket movement, you know it's going to pull back. And so that's really happened for us. If we take a look at maybe what's happened between, let's see, Thursday, the 4th is that a Thursday? Yes, Thursday, the 4th of June to today, we've had a cycle down into 2059.75 on the ES in support. We ran back up into 2104, 2105, something like that. And now we are popping right back down into that space. I bet we stay rangy until after this meeting. There's a lot that's hinged. We've got a lot of macroeconomic things that are floating around. And
Hmm.
so we are still in that trading range in my mind. We're trying to hold this 2075-ish area, but it's getting penetrated. Here's my thought on weeks like this, and particularly coming into an expiration, a quad expiration event like we have coming up, we should have at least maybe 1 or 2 days of aggressive motion that might time itself with the FOMC, but any kind of massive range expansion in any direction is a good place to play the reversal trade as far as I'm concerned. So that makes swing trading a little bit tough. I'm still sort of sitting on my hands in general from a swing perspective. If I'm working on any swings, they're usually very quick, maybe lasting just a few days. We've had a couple of nice flyers. I've been looking at, I knew that Apple was just going to sort of stay range bound for a bit. So there that went. And so we were looking at the IYR for the pullback, and it gave us that, and now that's sort of floating around. So there are a ton of stocks in limbo. I do not see a great deal of high probability trading events. Now that's really different to a trading event. There are a lot of places you can look at and go, you know what, I can take that trade because my technical analysis says that if I have this crossover, then I can do this. And nothing's wrong with that. But when people struggle with consistency, it's because they just look at the setup itself, not where the setup is sitting. And that creates all those whirls and eddies that happen to us in a trade and get us knocked out. And it really damages our level of consistency. And so what I have a tendency to do is drift back into a measure of greater inactivity because I'm looking for a high quality strike. And right now, it's just really on the edges of these ranges. And I feel like I'm sitting in dead water, frankly. It's been extremely annoying, frankly.
And If you look, and I was pointing this out, I think about a week and a half ago. If you look at the S&P futures chart, and you look at the chart of Apple over the course of the last 4 months, they are virtually identical. And you talk about the S&P futures being in a range. That Apple chart has been in a super range here too. I mean, every time we get down to 125, seems to find buyers. Every time it sneaks up to that 131, 132 area, seems to find sellers there. And I've always just, if the range is there, it's well defined. I guess why not trade it, right, Anne Marie?
Exactly. And sometimes you just have to wait for those edges. Now, with a range like Apple, you can trade the midpoint breakdown. You know, sometimes they say don't diddle in the middle. You
Hmm.
can just trade on the edges of these. But if you have a cycle that's, you know, 6 to 8 points wide, like Apple has been since February, legitimately, right? The beginning
Hmm.
of February, we can look at those midlines and say, okay, you know what? I can see the group of sellers. I know the buyers are going to lose their strength if they can retest the area. And so you can take that midline down into that trading support. And so if you have the well defined trade sitting in the channel, you definitely can trade it. You just have to be careful sitting on those edges in case there's that teetering or tipping point that sends it into the space. But the risk level is very low when you're sitting on those edges. And so that's why I like waiting for them in these trading ranges.
Anne Marie, let's talk to you a little bit about the financials. If you're looking for a pocket of strength in the market with the looming interest rate rise, which we still don't know when it's coming, really caught a bid here in the financials. Goldman Sachs, Morgan Stanley, Bank of America here. That's been the strength in the market. Give us your outlook in the financials, and do you think that trend will continue?
You know, I do think it'll continue because, you know, it comes back to the thing that I talked about maybe a couple of times past that I was here. I really like looking at super strong end of the year ETFs, how the ETFs did as a whole over the year. It's why we looked at the IYR to short it because it was very wide outside its average range of return for the year. And the XLF really underperformed last year. It did not give us the type of movement, or actually year before last, it didn't really give us the type of movement that we were looking for. And then last year it was a little bit on par. So there's still space for these guys to move. I think they're going to catch their stride again. They're coming up for air. You know, they've been regulated and they've had to spend a lot of money doing what all the new agencies are requiring of them to manage risk better and that sort of thing. And they really are coming up from under that, hitting their stride. So I believe that that's going to be a pocket of strength that is going to run just a bit further. Again, you know, my thought is September is really going to be a fireworks region. The beginning of that fourth quarter, we're either going to have a solid expansion zone to the north, or we're really going to take a nice drift down into deep support. One of those two things, but the XLF surely should be a nice creeper. What you should, I mean, my thought when I look at the XLF is I think to myself, all right, I want to wait for that to come back into the 50 the next time it does, the 50 on the daily. I'm going to pick some more up. That's a good space to look at.
Okay, let's take a look within that financial space. Any particular issues you're keeping an eye on?
You know, because I like to wait for that pullback, I am looking for Goldman to come in a little bit. It seems to be a little bit extended from its 50 on the daily. And so I'm actually thinking about taking maybe a short that's very counter trend in terms of that chart, but get a short underneath maybe 211 and watch it come back into 209, see if it can drift into 205 and finally 201 to 202. That ought to be a really nice place, and then I'll be looking to turn around and go in the other direction. I really like Goldman. They're strong. I don't like Goldman per se, but I like the Goldman chart. And I think that it's a very good trading vehicle at this juncture. Not a place to take it long right now because it feels a little hyperextended, and I don't like it so far away from the 50 to take a swing position. I like to see rotation.
Anne-Marie, what do you think about the oil stocks here? Not oil itself, but some of the major oil stocks. Because ExxonMobil here has been hanging out at this $84 level, got back here March and April, took off, formed like a head and shoulders top back in May, and the neckline just looking there towards the end of June here, broke down. Now we're back at 84. We're breaking down here again today at 83.5. Also looking at Chevron, which is actually below its March lows here right now. What are your thoughts on oil stocks? I know oil's come back a lot, but some of these majors have not. Are you concerned here on oil? What are your thoughts?
Well, I trade oil very aggressively with the WTI, so that's really right in the middle of my personal wheelhouse, how I make money every day. And for this particular group, remember, what's happening to them is they've got tons of rigs offline, and they're not pulling new oil out of the ground. And so, because what they're hoping to do is get these reserves really dipping down so that they can start producing again. But the weight of the Saudis coming in and saying, hey, listen, we're going to put more oil out onto the market in order to capture this market share. It's been a long time since OPEC's really been able to tell the world what price that oil should be charged for. And so what they've done is they've tried to recapture, and they are recapturing that power by really flooding more into the market. Now, Boone Pickens said that he felt they were at maximum capacity, and they came out and said they were going to do X much more. So he thinks that they aren't going to be able to do that. I don't know. I don't listen to much of that and take it with any more than a grain of salt. I look at the chart. But these oil services groups are really getting pinched because of that particular dynamic. So I don't particularly see them being anything more than laggards in the space until we get this flush with oil, which I still believe that oil has not found its bottom. If you look at say somebody like Goldman Sachs or somebody that really trades a lot of oil, they actually have a target range for WTI much lower next year than the target range that they have for this year. And so they also see that little bit of a decline continuing because, we're really in a very complex environment right now. Oil services should really suffer or at the very least lag. I don't see these guys as performers towards the end of the year at all. I would imagine that they either drift lower or fall into a new trading range that is a bit lower than where they are. They're so strong, I don't really see anything that's going to collapse. But in the end, they don't have the wind at their back. They're facing a headwind right now globally with all the macro events.
Real quickly, take a look at Halliburton here out of the chat. Nita was asking about that. Low you see here, 44 and change, been in a trading range. To me, that resistance looks pretty well defined there. Really, anything over that $46 level. Any thoughts on Halliburton? HAL.
Halliburton, I used to look at Halliburton a lot, and I still have a fib up from here. And this chart actually is sitting in a trading range that began in essentially November of the end of the November option. So that from about November 21st to current, and now it is sitting, it's really got a different formation to the average group in there. Mm-hmm. But right now it's sitting in a very sideways trading event. Here's my thought when you look at sideways events and I don't see momentum shoving it in one direction or another. When a chart loses a level, it has a tendency to come up and retest the level it's been dancing around for a while. And so to watch this chart to see what it's going to do, we need to look at it below 44, see if buyers step in and push it back into the area of 45 where it's sitting. If it loses that 45 area, that's a fairly good shot that it's going to come down, retest the 44, probably get into 42.40. On the flip side, if it gets up over 46.50, 47, and then comes back down to retest the 46, 46.50 area, if it holds that region, you want to watch for a day close or a 4-hour candle close, then you've got upside. Both of these formations, however, only give you trajectories into relative support on the first for the stop, for the short, and relative resistance. For support, it looks like 42, 46. For resistance, it looks like 49.57. Ultimately, range-bound behavior. Really, really, really range-bound behavior.
Anne Marie, before I let you go, you made a comment earlier in the interview about treating the crude market, and you said that's kind of been your go-to instrument. I'm looking at the light sweet crude. I think you mentioned WTI. You been
Yeah.
trading that a lot intraday, and if so, what indicators have you been using?
I do trade it a lot intraday. My I try to be very simplistic about looking at oil. Oil is a very emotional chart, and so I like it because emotion tends to expand really rapidly when it starts moving. And so what I like to look at is where it sits in a channel from an hour of trading, and then I will look at the 50 simple moving average on the 30-minute chart, the hourly chart, and the 5-minute chart. I will take a look at those. And so if I can see all of those things converging, then I will be very excited about a trade. But if you were to say, well, really, where are your trigger events? My trigger events come at the retest of support. If it loses it, then I'm going to take the short. If it breaches resistance, retests the area, and then holds it and pops up, I will take the long. I do not take the first pass down because there's a tricky little group in oil that they like to initiate the edges. They create bear traps and bull traps. I mean, almost every hour. There's some kind of cycle event like that. And so you cannot take that first break. You can't take the first break down. You can't take the first break out because a lot of times they're fake. And so you have to watch momentum deliver directional motion to you. And the way you can see that is by using the retest. I'd advise anybody that trades oil, if they paid attention to that one dynamic, they would have much more consistency in their trading, simply because they know that those penetrations down are usually regions to buy if momentum is sitting in the right space, and the penetrations out are usually spaces to sell. It is only at the retest of those events do we confirm cycles moving downward or moving upward.
Thank you. Great explanation. Anne Marie Baiynd, author and financial analyst, joins us every 2 weeks here to discuss her outlook for the markets and her trading strategies. Very concise. Thank you, Anne Marie. We'll speak to you again soon.
My pleasure. Have a great week, gents.
All
Thanks,
right.
Amory.